Patrick, I'm going to begin with you because in my note, I keep seeing the word wobbly, your word, with respect to the U.S. economy. Where are you seeing the wobble?
The recent economic data, people may focus on the last GDP number and the first quarter, but that disguised a significant slowing of momentum in a whole host of different numbers, including in earnings. Earnings were up marginally in the first quarter, but out of 8 out of 11 sectors, they were actually down year on year. So I think that's one of the reasons why the Fed is looking at cutting rates and why the market's eagerly anticipating that.
Let me a quick follow-up there. How much of the decline in earnings is the result of unfavorable comparisons because it was the first quarter of last year or maybe the second quarter of last year where the tax cuts really started to play and that tonic has been taken out?
Well, you're not going to see another year like last year where you had at one point, 30% year-on-year rise in earnings per share, driven, number one, by the reduction in tax rates, but number two, by the big surge in corporate buybacks. So both of those are receding in terms of driving factors in earnings growth, or at least earnings per share growth. That's okay, but the broader issue is that the economy is slowing and that a number of economic indicators have peaked. Now, that means that doesn't mean we're going into a recession, doesn't mean things are falling off the rails, but it does mean that people are interested in what the outlook is going to be.
Let me bring in Jack Patrick here and see what he says. Do you see it the same way? Jack, do you see the same wobble? And if you do or don't, what should I do with my money now that we are at the midway point of the year?
No, I don't. I mean, I understand the wobble, certainly Patrick's perspective, and you're right. We got a boost of growth over the last 12 months that really pushed us well above our potential growth rate, which I see as about 2 to 2.5%. You get 0.7% growth in labor force, plus about 1.5%, a little bit higher in productivity. So I think as long as we can stay roughly at that trend growth, while it sounds wobbly, it sounds kind of tepid, we could continue to, baby step forward and continue this expansion.
Can the market move?
What that means?
Can the market move meaningfully higher, Jack, if the financials don't play ball?
No, and that's really one of my thesis of concern, and that is, financials have underperformed. It's been a pretty good forward look indicator into the S&P overall. It is the circulatory system of our financial market, and as long as net interest margins continue to trend lower, it just creates more and more headwinds for financials. So that's something I'm going to pay pretty close attention to when the banks report this week.